Kasia, the US market has been the go-to market really for many years, probably since the financial crisis. Do you think that's going to continue into 2019?
Well, certainly we've seen strong economic growth in the US, despite people being negative early in 2017 and even after the tax reforms. So looking forward to 2019, we still see definitely a positive growth trajectory for the US, but maybe at a more subdued pace. But if you think about it, they will still benefit from tax cuts for the consumer, and the consumer is the workhorse of the US economy. So that's definitely a positive for the US going forward in 2019.
Now, there's a saying in investment that bull markets don't die of old age, they're killed by the Fed. I wonder if you think that the central bank in the US is tightening policy too fast.
Well, the Fed is certainly tightening, and their roadmap has been well communicated. And therefore, we should expect them to continue on that rate rising path unless they see slower economic growth. And they do have that on that radar. So I think the hope is that if growth does slow down, they will be able to claw back some of that communication.
Let's talk about one of the key sectors that's driven the markets in recent years, technology. Very recently, technology has sort of come off the boil a bit. I just wonder whether that's something that concerns you.
Well, we've had and highlighted those risks of the FAANG names derating for some time. Even when they were leading the market in 2017 and early this year, we noted there were significant risks to their sustained growth, namely from regulation, from tax. And now those are all coming into play. So, there is that perception that not only in Europe, but now even in the US, that maybe Silicon Valley isn't favored by the politicians as much as they have, and that's going to be headwinds. So we expect volatility in those names, certainly in the shorter midterm.
You mentioned politics there and the midterms. I wonder how politics has been affecting the markets.
Well, politics has certainly impacted the US markets. We've seen that with the presidential election, and now with the midterms behind us, what's interesting is actually the polls called it right, that there was going to be a mixed Congress. And so what we see with that is that maybe some of the policies that are very Republican based may not get through, but certainly there are policies that both the Republicans and the Democrats both favor, which is infrastructure and defense spending. So that is more likely to happen than not.
Now, with the US outperforming other markets, some people think it's become too expensive. Is that something that worries you?
Well, the US has always commanded a premium valuation because it is much more defensive, less cyclical than other markets in the developed markets, but also in emerging markets. So people want to pay up for that certainty. However, as you said, that evaluations relative to history are certainly stretched. But there are still sectors that haven't really felt the love by investors for a number of months, if not over a year now. And those are the areas where we're likely to see growth in the coming months.
The US is obviously a very important market. I wonder, as a UK investor, how much of your portfolio should be exposed to the US?
Well, the US commands about 50% of the global index, which is 7 times more than the next single country, which is Japan. So it's wise to have certainly a larger exposure than not. And it also is more defensive in nature. So if we do think that we're in the final stages of the business cycle, exposure there is also beneficial.
Kasia, thank you very much.
Thanks, Tom.